business. So I decided to start working with insurance, real estate together. So now basically 90% of my business is insurance for real estate investors. I like to say it's for real estate investors by real estate investors. I have, as of this date, rehabbed and sold just under 200 houses. Now, compared to the guys at RIA, it's a really small number, but when you have a full-time job, that's plenty of business. I had owned up to 30 rentals at one point in time, 30 doors. But the rental business required a lot more attention than I was willing to give it. So I've been taking down my rentals and honestly taking some profit off the streets because the market is so good right now. So I like to think that I know the business of buying and selling houses as well as most of my customers. Certainly not all of them, but most of them. And that gives me a different perspective on your business and your needs, because pretty much whatever you're going through, I've probably done it myself for my own property. Never mind, I've seen it 100 times for 100 different investors. And when my phone rings, I say that 50% of the time we talk about insurance. But I'd say 30% of the time people are coming to talk to me about real estate. Something, it may relate to insurance, but it's real estate questions. I like to think that I am another avenue for answers. And I think if I have any of my customers that are listening in, they will certainly attest to that, because we talk about areas, we talk about the cost of rehab, talk about anything, because that's the business. Insurance, honestly, is easy. Finding the house and getting the deals done, that's what you have to work at. Insurance should just take care of itself. And I like to say that that's what I do. So that's who I am, that's what I do. Now we'll talk about insurance. All right, so
and
first,
Bob, just so our audience knows, we'll be putting up some poll questions also as Bob's talking. Just gives us a good idea of who our audience is too. So, hopefully you guys will answer some of these questions, because we could kind of curtail the conversation, because insurance is such a broad subject. I know Bob could probably do an insurance seminar for about 8 hours or 10 hours because there's so much to it. So we're going to hit some basic things. I know also throughout the chat, we will give you Bob's information, because I know a lot of times I get the case by case of their special situation. So if we don't get to those questions, I will give you Bob's information, and you could always call him or email him to have those insurance questions specifically answered for you too. So.
Okay, perfect. Thank you. So,
oh, we just lost Bob. Hey, Bob. Oh, there you are. Back again.
I had to find the button to skip the poll. All right, so I'm back. So let's talk about the types of investments. Most of the people here are probably looking to buy a single family house that they're either going to wholesale, they're going to rehab it, or they're going to make it a rental. So I do insurance, single family homes. Also do it for multifamily, 1 to 4. Condos is a market that a lot of people like. Some people are nervous. People do it. A big market that I've been doing a lot more business in is mobile homes, because the mobile home market is different, because if you buy in a park where you own the land, you're getting a house for pretty low cost, and the return on investment is pretty high. And then we have commercial insurance and larger habitational. We deal with those every day, and I deal with those every day. But basically, we need to talk about the types of investors that we have here with us today. So the first investor is the guy that's strictly starting and he wants to be a wholesaler. So all he's looking to do is build a book of names so that he can get a house under contract, he can find it, and he can assign a contract and make money. That type of person, for the most part, doesn't really need my services. The challenge is that most wholesalers end up holding something for one reason or another, whether it's an A to B, B to C closing that has a delay on the B to C side, then you need to get transactional money. And in some cases, transactional money requires insurance. So then even a wholesaler who normally doesn't use my services would need them.
Bob, actually, because remember, some of our viewers might be new to real estate. So I know you're talking A to B, B to C. What we're talking about is double closings. So we're literally buying it in the morning, but we're selling it in the afternoon. And if you're using money from somebody else, transactional funding is what Bob's talking about. The lender might require insurance, even if you own it for a few hours. They will not fund the deal, depends on the lender. So that's what he's talking about when it comes to double closings and A to B to B to C. And if some of you guys don't know what any of that means, we actually have a couple of those webinars on our YouTube channel where Ryan and I explained it pretty well.
Thank you. I knew that I would get ahead of myself, and there you go. But understand, because I've been in the business a long time and because of the fact that I've done this myself, I just assume everybody knows it, and that's a mistake, and I apologize for that.
No, not at all. Trust me. Sometimes, when you're experienced as much as you are and doing all these deals, it's just normal terminology for all of us. And sometimes, I remember when I first started, I was like, what the heck? A, B, C, what is there? D, E, F? All confused. So,
all right.
But I don't know if you also noticed in our poll today, just so you guys know, more than half of you guys are new to real estate and don't own any properties. 1 to 3 of you, there's a lot of you that have 33% of you actually own some properties too. So that also makes it easy to give an idea. So we have an eclectic group of people today. So half are new to real estate, meaning they don't own any investment properties. The other half has owned some properties. So just to give you an idea of.
All right, very good. So some of this information for that 12% that owns more than 7 properties may be a little basic at certain times. I apologize for that. If you own more than 7, you may know more than me. Who knows? But back to investors. We've talked about wholesalers, and that's one portion of it. The next is the guy that actually wants to buy a house like I did when I started, buys a house, gets it under contract, calls Carl Sheely, has the inspection done, gets a good price, closes with whatever closing agents, gets hard money from whomever, and then they need to rehab a property. That's your standard fix and flip. And that's probably what I'd say most of the investors are looking to do. Certainly not all, but a large percentage of people want to do that. I mean, I think the rule of thumb for investors is you rehab 5, you hold 1. That's how you amass your fortune. Now, those numbers may change with the marketplace, but I know historically that's what people have touted as the generally accepted way to do it. So you buy a house and you go into closing. Guess what? You need insurance. Well, people a lot of times come to me and they say, I'm paying cash. Therefore, I don't need insurance. And the answer is you don't. There's no one at the state or at the closing agent that cares whether you have insurance or not. However, if you don't buy insurance, and if somebody slips and falls on your property while you own it, you now have a new business partner. And if you're looking to make 10, 15, $20,000 on a deal, does it make sense to anyone to save $800? It just is a line item that you have to have. Now, the insurance that we're talking about, you have a
Bob,
question,
Bob,
Anish?
Bob, I'm sorry to butt in for a quick second. We could hear you fine. Unfortunately, your video is frozen, so you're just like the voice from above.
Oh, I see that. What have I
Okay.
done? Let me stop the video and then
Okay.
start
Yep.
it again.
Yep. There you go. Oh, go back. Yep. There we go.
Okay,
Otherwise, you just sound like the voice from above. So I was even getting like, hey, is
I
that
like
someone else talking to me?
I like that actually. But anyway, so we're going to buy a house, and the hard money lender wants us to have insurance. The insurance that you get is generally a builder's risk or vacant insurance. Those types of policies are written for a short period of time. Sometimes that time frame is dictated by the lender. Some of the lenders will allow you to do as little as a month or two. As a very general rule, most lenders will accept 6 months. There are some that require 12 months. That's not the worst thing in the world, because with most builders risk policies and vacant policies, if you buy a longer term and you sell it quicker, you can cancel it and still get money back. There's a large percentage that's earned, but there's still a prorated portion of the premium. So it's not as bad as it could be. Now,
And Bob, builder's risk. Want to
well,
explain the difference
that's
between?
exactly where I'm going. So
Oh, perfect.
a builder's risk, if you're going to buy a house and you're going to rehab it in some fashion, more than just cleaning up the things in the house, you're going to do a new kitchen, you're going to do a new bathroom, new floors, retexture the walls with some knockdown, those types of things where you intend on spending $10,000 to $30,000 inside the house and outside the house. That's where you get a builder's risk. And that's obviously you're not a builder, but it's a house under renovation of some sort. Now, there are houses where you buy it and they're in perfect shape and you just got a great deal. You fell into it. You're going to put it on the market on MLS day one. So that's truly not a builder's risk. But there's another policy called vacant insurance. It's exactly the same in coverage. However, it's a different type of policy in cost. Coverages are the same. But from my point of view, when people call, we just talk for 2 minutes. You tell me, oh, I'm going to do this, I'm going to do that. And then I run with it. You don't have to worry about understanding it, because when we've done one deal, you'll say, what did I do? When we've done 2 deals, you'll say, oh, I remember that. And by the time we've done 3 or 4, you're going to know exactly what I'm doing before I ever do it. My job is to take that knowledge that I know everybody wants to have out of your wheelhouse. You don't need to worry about it. Understanding what's occurring and understanding coverage is very important. However, you don't need to be an insurance expert. That's why I'm here. So we have the fix and flip. One of the questions people ask, of course, on a fix and flip, whether it's builder's risk or a vacant, is what does it cover? And that is and can be a complicated question depending on the markets that we use. However, as a very general rule, those policies are basically fire, vandalism, malicious mischief. In other words, someone comes in and damages the house. Hurricane. Those policies generally exclude water damage from busted pipes, because with a lot of the properties we buy, it's a very common problem to have water problems. The insurance companies understand this, and that's one of the things they take back. And there is a theft exclusion, although you can get a certain amount of theft coverage if you desire. Generally speaking, I don't recommend it, honestly, for a couple of different reasons. The number one reason, it's kind of expensive for the amount of coverage that you get. And also, if you're careful on a rehab, not much is going to happen. The tools of the guy that's doing the work are never covered anyway. So we're only talking about your appliances, your kitchen cabinets. Once they're installed, they rarely ever go. The only thing that ever gets stolen, I've had 3 thefts in all of those houses, and every last one of them was an outside air conditioning unit. So you know what I did? I got the contract of a guy that does the cages, and I spend $212, and he puts a beautiful cage, and that's it. I'm done. And they just go next door to steal the neighbors. So that's my theory on it. But when you buy these fix and flips, you're going to get that coverage. You're also going to get liability insurance, like we were just talking about, that neighbor that wants to walk on your property and look in the window because he's curious as to what you're doing to the house, and he doesn't have the courage to knock on the door and come in. If he trips in your front yard, he's going to sue you. Is it your fault? Probably not. But the lawyers, they don't necessarily care. It's a matter of who they can sue and for how much. So when we're talking fix and flips, that's what we're talking about. Buying that property, rehabbing it, and reselling it. We can do it for a short period. We can do it for a longer period. And if the rehab goes longer, we can extend them. And then the third basic type of investor is a guy that's buying a property and he's going to make it a rental. Whether he's going to do a rehab first and then have it as a rental, or whether it's inheriting a tenant, which he eventually hopes to get out so he can stabilize the property. And stabilize basically means do some very basic work, paint it, maybe put new appliances in, and then get the going rate of rent. Because when you buy these properties, usually you buy them from distressed or motivated sellers who are not getting the rent that is appropriate for the neighborhood. If you buy it and you can get $1,500, why take $1,200? So that's pretty common. And on the rentals, that gets to be a little different in coverages, because when we're doing rental insurance, we then get into a more traditional insurance product. And those two traditional insurance products for rentals on any property between one family and 4 family is a DP, or dwelling policy. Now, within a dwelling policy, there's 2 separate types. There's a basic form and a special form. A DP1 is basic, a DP3 is special. And the difference in coverage is water damage from busted pipes. And the cost difference is probably 50 or 60% higher to get that coverage, because that is a claim that is happening across South Florida. I'm sure that in our participants, more than one person has experienced that claim. I think from the face I'm seeing from Anish, he certainly knows that. He's seen that. He's felt that.
Absolutely. And if you guys want to put in the chat, how many people have actually had to do a water claim or water damage claim? Go ahead and put a yes so if you have, so it gives us a good idea. How many people felt the pain that I did? Don't make me be the only one. Oh, Robin did. Yep, Eduardo. Oh, Stephen twice. Marie, yes, Philip. So you're not alone, right? So that's why it's important if you have the right type of insurance. Patrick. Okay, so I feel better that, I mean, not that I'm rooting for you guys not to have the same issues, but you could see exactly what Bob's saying. It's very common here in South Florida also. I do have a couple of quick questions I might just throw in here. Daniel is asking, how important is it to have insurance before, or is it better to wait when we get the deal to get the insurance? So you want to actually, yeah, go ahead, I'll let you answer it, Bob.
Obviously, you want to own the property, obviously, before you buy insurance, because, I mean, a lot of things can happen right up until you sign that paper. You know, there's too many deals that you've gone to the closing and all of a sudden some lien thing pops up at the 11th hour.
Yeah.
So you deal with almost any insurance agent, and it's not just me, anybody in the know, pretty much until that paper is signed, the insurance can be canceled. And in most cases, at least for my customers, in most cases, they take the insurance out of the HUD, out of the proceeds at closing. So even if you sign the documents, the money has never left your hand and gone to the insurance agent. So you're not even giving a chance for that error to occur.
Absolutely.
Right. It's good to have it lined up, but not to have pulled the trigger.
Yep. Also, they're asking, how much is the average in cost of insurance between builder's risk and vacant insurance, the price difference, since you're talking about, let's say it's the same property, I don't know, like $200,000 if you're going to do, builder's risk versus vacant insurance. I know it depends on the area. There's a lot of things going on there. Can you maybe give a difference in price?
Sure,
What
sure,
you've
of
seen, I
course.
mean, obviously.
Right. So I'm not going to go into the particulars of a specific price for that $200,000 house, but I will tell you that a builder's risk is generally about 30 to 40% less expensive than vacant. Now, a common question that may pop up in our Q&A is, well, if it's vacant, why is it more expensive? I would think since no one's there, it should be less expensive. And
Wrong.
actually, the thought process is 100% the opposite of that. But that's a question that I get asked every week from someone. A property that sits there and nobody is in for a week, for 2 weeks, for a month, has a much larger chance of many different things occurring, as opposed to when you've got a contractor going in 6 days a week. So what's going to happen? The vandalism people, they're going to be less likely to be around because there's activity. It's
Right.
not going to be boarded up, so it's not going to look like a nuisance that kids can go in and, do what kids do, smoke and drink, and then have a flame. I've had a guy that bought a property on a Friday. On Sunday, before he even got to rehab, house burned down. The kids came in and they just were having a party in the closed-in porch area, and that was it. Caught the roof line and total.
Yeah, I'm going to say as the follow-up question on that is, what happens if because builder's risk is 30 or 40% cheaper, right? And I know it's vacant, right? But I got the builder's risk just because I want to be cheap, right? I know a lot of people, you rehabbers, you guys are always trying to cut corners. Insurance is probably not where you want to cut the corner. So what happens if I got builder's risk and it was really vacant and then it got vandalized, right? I can't change it. It's not going to be covered, right? Or what? I mean, I know
Well,
situations where you
right.
hear those kind of things. So not me,
Yeah.
for the record, just so you
No, of
know.
course not you. Uh, I again, we walk a fine line sometimes on that. And I generally tell people, as long as you're doing some level of real rehab,
Right.
that I would go for it. They tell me, well, the property will be rehabbed in a month and then it'll be on the market. And I say, well, I said, when I started the policy, my goal is to not have made a fraudulent statement on day one.
Absolutely.
So on day one, if I know I'm signing a contract with Ryan to put it on the market tomorrow morning or right after the closing, I'm probably making a fraudulent statement when I say it's a builder's risk. However, if I'm going to do a rehab and I'm going to blow out the kitchen or I'm going to put in do something, I'm not uncomfortable with it. But I like to not make that fraudulent statement, because the answer to the question that you really ask is, what happens? Unfortunately, it's at the company's discretion what happens. And if the company knows that there's a fraudulent statement, they have every right to give you back your money and say, have a nice day.
Yep.
Now, honestly, I've never had that happen on a builder's risk.
Right.
What happens more generally is the insurance company will do an inspection in 30 days. And they say, this isn't a rehab, this is a vacant. And then they come back to you and ask you to prove that it's a rehab. And if you don't, they'll raise the premium. So listen, you get slapped and you charge more money. Okay, I tried to get away with it. I got away with it for 2 times before. I'm okay. But the real problem is when you're actually making that fraudulent statement. That's not a good way to start insurance.
Yeah, and that's the whole thing is like, as you're trying to, we're all, you being a rehabber too and doing deals, I know we're all worried about cost. That's not where you want to cut your cost. Like meaning, A, being deceptive, because the issue happens is when you do have a claim or, other things happen, right? You need insurance when things go wrong. It's usually what I say. So if you start off on the wrong foot, it's not going to be pretty for yourself. So it's going to be a bigger headache for you. So again, we're trying to teach you how to do the right things. Bob's been doing this for a long time. So these are the kind of questions, I know I get those, and that's why I figured I might as well ask the expert here. I do have another question here from Carol. If the non-owner, non-tenant rehabber lives in the house during the rehab period, what kind of insurance would be needed? So non-owner, non-tenant rehabber.
Non-owner, non-tenant. So in other words, you're going to have your handyman live in the house while he does the work.
I think so. That's the only thing I can think of.
That's the question. Well, listen, at the end of the day, there's 2 ways to answer that. And if he's moving into bed and that's it, I probably would do a builder's risk. However, if he's going to move in furniture in his family, that's a different story. But that creates a bigger challenge, because when you buy that policy I was talking about a moment ago, that DP1 or DP3, most of those policies require inspections.
Yeah.
And I was going to talk about inspections in a little bit, but your house probably will not pass an inspection. So now you're in a bit of a pickle where you need to have insurance because Niche, as the hard money lender, requires insurance, and you can't truly buy insurance through a traditional insurance policy. You might be able to go to a commercial market and get it done, but it's either going to be expensive or there's going to be some shenanigans afoot. Something is not going to be right. So I'd say, as a very general rule, that's probably not a wise idea. However, it's a great idea to avoid theft, and maybe you get a better price. I mean, I've rehabbed a lot of houses and I've never had that happen. I did have a guy stay in the house one day with a gun, which I would never recommend, but that was a different story. We don't want to get into that. We don't want to know the things that I've done. I'm telling you the things you shouldn't do.
Right, exactly.
But I'd say that the type of insurance is still a builder's risk.
Okay, and since we're actually talking about DP3, Lipsy was asking, how many quotes should you get on a DP3 insurance?
How many quotes?
Quotes?
Okay.
I only say one with Bob.
Well, listen, if you call Bob, you're going to get as many as are available. The challenge today, right now, is some of you, certainly people that own 7 properties, know the state of the insurance market. It is a train wreck right now. There's a thing called reinsurance that most people don't understand, but you buy insurance from an insurance company, they buy insurance against their portfolio from a reinsurance company. So if they charge you a rate of $1, they have to buy reinsurance and they pay that reinsurance 30 cents. So they're left with 70 cents. What's happened is the reinsurance towards the beginning of this year was reading all of the things, was looking at the international problems with COVID. They were looking at the fact that they were talking about a super busy hurricane season, which they certainly got right. And then you top it with riots everywhere. And the one thing that insurance companies don't like is uncertainty. And the one thing that 2020 has given us is a gigantic pile of uncertainty. And at the beginning of this year, if you wanted a quote on a DP3, I could have probably found 10 companies that would give you a quote. Right now, on any house, I'm lucky if I can find 2. And that's just the way it is. And I don't care what insurance agent you talk to, everybody's experiencing the same problem. And I don't think it's going to go away for the next 6 months, but I'm hopeful first of the year things will change. So the answer is you're going to get a quote on your DP3, and if it's in South Florida, you're going to get a quote from Citizens, and then you're going to get somebody to give you a quote that's going to be with a Lloyd's market, whether it's a Lloyd's independent company or part of a master policy. And then 1 out of every 5, you're going to find another company that's willing to do it. But that's what the market is right now.
Yeah, I mean, it's a little crazy. I mean, you hit all the spots. It is almost a perfect storm on the insurance end of it, and that's not good for us. But again, you got to build those costs in while you're, rehabbing, or your rental properties too, because it's going to make a difference on your return. Sandy Ruiz asked, do you need insurance for land? What happens if it's just land?
Well, okay, so that's a great question. Actually, I had a customer that called me a couple of days ago, and he was buying a piece of land, and he was getting a hard money loan on the land, but he's also going to build a house, but he's not going to build a house for 6 months. So what he's doing is he's getting a loan, but then I'm not knowledgeable in the terms for lenders, but then he's going to have money held in escrow for when he gets a building permit, and then eventually monies will come out. And so the lender is saying they want insurance for $200,000, and he's asking me like, well, why do I need that insurance? I said, well, I don't disagree with you.
Mhm.
So the answer to the question is, when you own land, you don't need property insurance. However, you still want liability insurance because you have a vacant piece of land. The kids, let's say there's a driveway there because there used to be a house, right? So the kids all go up the driveway because it's on a little bit of a bank, and they ride their skateboards up and down the driveway. Liability claim. They slip on your driveway, guess what? There's a crack in it. Even though it says do not trespass, they go there and they have a fall. You now have a new business partner. So, and the thing about liability insurance on vacant land is it's extremely inexpensive. I mean, it's so inexpensive that if you had one lot, the premium would be less than $50 for a year. You can't get that policy because the companies won't actually sell it to you, because it makes no sense for anyone to pick up their pen to collect $50. But if you own 10 of them, you could get all 10 covered for $500 without any doubt. So it's cheap, but that's what it is about land, because there are people that make land plays, and that's all they do. They just buy and sell land. But the people that do it with me and do it often, they always buy liability insurance.
Perfect. Yep. And I'll let you go back to I'm answering some of the questions in the Q&A. I know you guys are putting some really specific case, like your situation kind of questions. So what we're doing is we already put in the chat Bob's email and phone numbers there. So I invite you to actually contact him directly because I know Bob's got a lot of information too. So, and we just put a quick poll up there to see how many people have liability insurance for their business. and 35% do, 39% do not, and 24% of you did not know you need insurance. So I don't know if you want to kind of talk about your business liability insurance as you're doing this. Why would you need it, or why do you think you need it?
All right, well, that's great. That segues into one of my next sections, liability insurance. On every single house that you own, whether it's a rehab, a rental, a wholesale, whatever, liability insurance is the single most important thing you need. Because listen, at the end of the day, a hurricane can come and it can take a roof off, and it's going to hurt when it happens. But if you don't have insurance, that's a recoverable loss that you can survive. Liability insurance can be a non-survivable thing without insurance, because drive down the road, look at the billboards. They're talking about auto accidents, but believe me, those lawyers are equally happy to sue your landlord or sue wherever you fell. Now they have people, if you have parking lots that aren't lit, they're going to get sued because it's an unsafe environment. Liability insurance is absolutely required. And what I tell people when they buy houses and they buy them for cash and they say, I just don't want insurance. I said, okay, I don't have a problem with that. All I care about is you know what you're doing. I say, if you don't buy hazard insurance, I said, I'm okay with that. I would be lying if I said there hasn't been cases when I did not buy hazard insurance. I think I said the wrong term. However, if you don't have liability insurance, you're a fool. And you should just not be in the business, because that's too much risk for too little money. Period. I mean, when you look at it as a monthly item, it's $12, $14 a month to have $1 million of liability. I mean, come on. How can we be that foolish to take that risk? So liability insurance for you guys at home rentals is a must. And what I would further say is, like, if you buy a house and it's in your own personal name, when you buy a dwelling policy, a DP3, that policy can come with liability, but it comes with not enough liability. I would never buy the liability as part of the hazard policy. I would always go out and buy a standalone liability policy with at least 1 million per occurrence, 2 million aggregate. Most attorneys nowadays, they say that 3 million is the new 1 million. But at 1 million, 2 million, you're in pretty good shape. And for people that own 2 or 3 or 5 or 10 properties, you can get a single policy and you can put them all together, even if you own them under separate corporations, as long as ownership at the end of the day is identical. If you buy every property in the land trust, as long as the end beneficiary of the land trust is the same, you can have 20 different names, all under one policy. But liability is a must. Must, must, must.
And I guess the second part, what happens if you don't own any properties just for your business, your real estate? So here at Bria, since we actually do live, well, we used to do live events, but we do have an office. We'll be back to live events soon, but we actually have liability insurance through Bob. So, I guess some people are asking, if I'm a new investor and I just set up a corporation, do I need to get liability insurance? And let's say if I work out of my house, like most investors, what would you say like that?
I would say that for 98% of the people that are probably here, myself included, I do not have a standalone liability insurance policy for my corporation. I do, however, have liability for every property I own. Since 100% of my exposure is at the properties that I own, I'm comfortable that having liability insurance on each of those properties covers me. Now, what happens with this question to a small extent is we're talking about your business. And if someone has a brick and mortar store, got to have liability insurance. My insurance office where people can come and go, got to have insurance. Now, for real estate investors, you know, for the people that have their own store, their landlord probably requires them to have insurance anyway. You buy that, if anything happens, you're covered. They slip and fall, you're covered. However, that liability policy that you purchased does not necessarily cover rental properties. You have to have them covered elsewhere anyway. But the better part of this question actually relates to errors and omissions, which is something that I have no intention of getting into because it's going to be way too complicated for this venue. When we have a live meeting, I'll be the guy in shorts, in a t-shirt and flip-flops. You can come and we can talk about it over a beer, no problem. But E&O insurance is an exposure that real estate investors have, because then you get into, well, I made an offer on a deal and I did it directly with the owner of the property. And then I reneged on the deal and the owner lost it at the courtyard because I didn't do what I said I was going to do. That's not liability insurance. That's professional liability, errors and omissions. A different animal. It's great coverage to have. However, I'd say 99.9% of people in our business do not have it, myself included.
Yeah, and just to be specific, because I know Nanette's asking me, what does it cover exactly for the business? So if you have liability insurance, right, and you have a brick and mortar, so I imagine the basics, right? If someone slips, falls,
Correct.
You know, if we do events at Signature Grand, we always have to have insurance.
Right.
Anything else that you would say it would mainly cover that we would
Sure.
be looking at?
A traditional liability policy has, I think, 5 different coverages. You have a general occurrence, which is a $1 million for slip and falls, your standard stuff. And then you have an aggregate, which is a maximum it'll pay, and it's usually double the occurrence. But then in addition to that, you have personal injury, advertising, and slander. So you have an event and you say that Bob Pepe is the best insurance guy in the whole country, and somebody from New Jersey has already coined that phrase. Guess what? There could be a personal injury, liable slander situation. It's in there. Have I ever seen one in close to 40 years? No, but it's there. You also have completed operations. Now, for our business, completed operations doesn't really mean much, but it's after you leave. Say you did an event at the Signature Grand and you left your big giant screen up, and you left because you forgot it or whatever happened. A giant 20-foot screen was there.
I wouldn't forget it. Ryan would forget it. No, I'm kidding.
Okay, so Ryan forgot the screen, and then you left, you were gone, and the cleanup crew was out there, and then the screen just toppled over and hit somebody that was cleaning. That's a completed operations because it's not something you did or you actively had as an occurrence. However, something you did before caused that problem. Like if you spilled water and then you left the water there. They slip and they fall. But that's not truly liability. That's a completed operations or that type of thing. They also have fire legal liability in case you cause a fire and it damages someone else. And then medical payments, which is just nuisance payments. Like someone says, my jacket got caught on your fence. Here's $1,000, go away. So,
Right.
But almost all of those coverages relate to a brick and mortar store. Depending on the business you're in, those coverages can extend. That exact same policy is written for a contractor. And then the completed operations is far more important. That is written for an insurance agent. That's written for an accountant. It's written for BRIA. Everybody has that exact same policy. And depending on the business you're in, depending on which coverage actually means something to you. But I think you're generally right. It's a slip and fall type situation. It's a very broad statement.
Yeah, absolutely. I didn't realize it covers all those other things too, but that was the main thing I always thought of too was.
Well, if you ever looked at what I sent to you, you're going to see all those other things in there. I appreciate
Yes.
you paying attention to what I'm sending.
Yeah. So the great thing is, I know you know what you're doing. You know our conversation. Hey, what do I need? Send me the quote. I'll send you a check. I don't want to be the insurance guy. I'd rather have a great insurance guy in my team because it's way too much information. Again, it's important to have good teammates, and that, for me, I'm actually learning a lot of things today too. Also, I do have a question since we're kind of talking about umbrella policies. Marie was asking, are there any programs to insure all my rental properties and provide an umbrella policy, or is it best to keep them insured by whichever carrier is available at the moment? So when you own multiple properties is what I'm getting at. Is it better to have an umbrella, or is it to keep them separate, or is that just personal preference, or what do your big investors do? That's
Okay.
probably the better way of saying that.
The first thing I'm going to say is the term we're using, umbrella, we're using an improper context for insurance, because an
Okay.
umbrella policy is, we write umbrella policies. An umbrella policy is actually excess liability, and it sits over a primary liability policy. So if you have a basic policy that has $1 million, you buy an umbrella policy that gets you to 5 million. What you're actually speaking about is a term that I used before, and it's a master policy. A master policy is a policy that we can add 2, 3, 10, 50. I have people that have 300 properties under a single master policy. I have people that own properties in Michigan where they bought up all of Detroit, and they have 25 investors, and there's 265 properties. It's all covered under one master policy. The challenge is that, generally speaking, master policies are usually written at a 1 million, 2 million limit. That's generally accepted, what most insurance companies will do. Then you buy an excess policy. You can buy it with the exact same company. Like if you buy a policy with ABC Company for 1 mil, 2 mil, they'll write a separate policy for an additional 4 million to get you to 5 million. It'll be the same company. It'll have the same dates. There'll be 2 premiums, and you can see what you're paying for your primary policy and what you're paying for your excess or umbrella policy. But if you're owning all your properties in different names, there's probably someone telling you you're doing that for a reason, for some level of asset protection. So my answer is, you really need to talk to them, because I can get them all covered together, but are you truly doing yourself a disservice when you're worried about asset protection and you have 20 different corporations, 20 different tax returns, and then you buy one insurance policy that you have to split up 20 times? First of all, I think you're tipping your hand that when something happens, they're going to get a copy of the policy and they're going to see that there's 20 properties. So all of a sudden, they know your deeper pockets than maybe you wanted someone to know. The challenge is it gets a lot more expensive when you buy 20 different policies as opposed to one. So that's a conversation that I have with people all the time. And it's a matter of, most people think, if I have the right amount of insurance, everything else will go away.
Yeah, I think I would just add to that. It depends on your comfort level. So I get that question too, right? So if I ask you, you might tell me one thing, my attorney might tell me something else, and then my accountant will definitely tell me something else. And then, and then I realize I'm making no money on my rentals after I had all the costs. So it just really depends. I've seen it all the way through where I've actually seen people with 20 different policies, 20 different LLCs. I know one of our members has well over 100 properties. He feels comfortable with putting 10 properties in an LLC, one policy. So I think it just really depends on what your comfort level is. So I don't think there's a clear-cut answer when you're looking at something like that. So it's, personal preference is what I would say is the easiest way. And actually on the poll, so it's kind of funny. I asked, what is cheaper pricing on insurance when you own a property? So 2/3 of you said a corporation, LLC, land trust, or other structures, and 1/3 of you said personal name. So what, I know you kind of touched on that. Is there a price difference or in general on the cost if I put it in my personal name versus my LLC or, land trust or anything of that nature?
All right. I'm going to use the term entity. If you buy it under an
Entity.
individual or any entity, whatever it
Perfect.
is. If you buy a builder's risk or a vacant, the quote is 100% exactly the same. No difference whether you own it in your personal name, land trust, LLC, C Corp, S Corp, and knock yourself out. However, when you get to holding actual rentals, whether they're single families or commercial properties, whatever, there can be differences. Although when you go the route of commercial, they're almost always in corporate names, so it doesn't really matter. Where it gets a little different is with the individual companies such as Citizens. I use Citizens as my example because everybody in this meeting knows Citizens. Most people that have owned a rental have owned it and they've had insurance through Citizens at some point in time. Whether they've gone to master policies or not, that's a different story. But in the case of Citizens, the premium is identical. The difference is Citizens will not give you liability if it's in an entity name. They will give you liability, not the proper amount, but they will give you liability if it's in your individual name. But the premium is identical. Where it gets more complicated is everyone other than Citizens. Those 10 companies, it's now 2. That'll be 8 next month as far as the people I can write with. They all have individual rules and the rules change. So I'm going to say as a very general rule that it makes absolutely no difference how you own a property.
On the
So
insurance
I
side.
think it makes a lot more sense to buy them in
Yeah.
your corporation and get some level of protection of your private assets, which this is not our conversation, or whether you want to
Right.
get an LLC and then have a Nevada corporation or a Wyoming corporation. That's not my thing,
Sure.
but I can talk to you about that.
Yeah, and I think that's and that was just a trick question on the poll because even I was curious. I was like, I don't know if it's cheaper with this or not, and so there was no answer. I should have put a third question on there or a third answer. It's going to be the same price, so I know I kind of tricked you guys. So my bad on that. I'm going to kind of change a little bit of the conversation because this is a question that I get from rehabbers. Right, I finished rehabbing the house and I'm going to send it to an end retail user. And the roof is only good for 2 years or 1 year. Can the new buyer, right, the end user, going conventional or FHA, can they get insurance on it? Or do they look at an inspection report? Or and I guess the other end of it, you could also even add about hurricane shutters versus impact windows, and maybe just a basic overview of what your thoughts as a rehabber. Do I want to fix? There's no leaks on the roof. I always get that one. There's no leaks on the roof. The roof is on its last 1 or 2 years of life. So I'm worried about sending it to the end user. What would your thoughts?
Okay, I'm gonna answer the question, but I'm gonna go a little further back before
Okay,
I answer the
perfect.
question. When you hold a rental or when you finish a house, if the house is more than 30 years old, Citizens requires a 4-point inspection, period. Other carriers require it at 40 years, but generally speaking, it's 30 years. Now, as far as the roof is concerned, Citizens requires an inspection when the roof is more than 25 years old. And any house that's built prior to 2004 needs to have an inspection for wind credits. So the 2 inspections that your end user are going to get are a 4-point inspection, and those 4 points are the roof, the electrical, the plumbing, and the HVAC, the air conditioning. You're going to hire Gaia or somebody to do an inspection, and they're going to go out and they're going to take copious amounts of pictures, and they're going to tell you everything that's wrong with the house. And I can tell you from personal experience is if you let that inspection be controlled by your buyer, you're going to think that you're selling the worst house in the history of houses. And you can't believe you just spent $40,000 on rehabbing this
Absolutely.
house because of the things that are wrong with this house.
Yeah, everything's broken, right?
Everything. Everything. The other inspection, and we'll get back to that. The other inspection is a wind mitigation. And that looks at the major points that get you credits on insurance. And basically it's the shutters or impact. Shutters or impact are the same. As long as every window is protected, the insurance company doesn't care how it's protected. They're okay with that. They look at the age of the roof for a Florida building code credit. They look at the type of nails that are used to attach the deck to the trusses. And they look at how the trusses are attached to the house. They're the major points. And the roof geometry. A hip roof is the best for premium. Now, going back to the inspection, because I know there's going to be questions on this. Going back to the inspection, the four major points. Number one is the roof. If a shingle roof is more than 20 years old, it has outlived its useful life. And that means that when you buy your GAF shingles, they say right on them 25-year life or 20-year life. That's what they say. The insurance companies know this too. If it's a tile roof, they'll give you 30 years. And if it's a metal roof, they'll give you 50 years. If it's a flat roof, they'll give you about 12. Rolled tile, something, rolled rubber, or whatever those roofs are made of. The challenge here is if the inspector is on your side and he goes up and he sees the roof and he knows it's 20 years old, but the roof, there's no leaks, and the roof isn't obviously missing all of the granules of the asphalt, he'll say that the roof has 3 years or 5 years of life left. And when he says that, the magic number is 3. If the roof has more than 3 years of life, your end user or you as a landlord can buy traditional insurance through every insurance company out there. Now, the challenge is some companies go and look at the permits, and a few of us rehabbers, I've never done it, of course, have been known to do roofs on a Saturday and a Sunday, and all of a sudden there's a brand new roof on Monday, and
Magical.
but it's magical, but there's no permit that can back it up. And that's why when you control the inspection, you can control the conversation. And I've had more than one case when a deal's blowing up and I say, send your handyman over there, do this and this, call your inspector and give it to him. And don't give him $8,000 off on the price. They do that. They say, well, if you want the house, here's a clean inspection. You can buy insurance. If you don't want the house, get out of the contract. I'll find somebody else. So, but the roof, 3 years of life. 2 years is a problem. 3 years is okay. The next thing is electrical.
Yeah. Wait, I was just going to ask on that. In case, like, let's say, I'm in that situation, can they call you and you would help them with the insurance and say, hey, this is what we need?
Of course.
Or
I do it all the time. I should have said that. That should have been my line. Thank you. But
yeah, I just wanted to remind everyone because I've actually done it. So that's why it's a little sarcasm. But Bob, over the years, I can't tell you how many questions he gets from Bria, from our team, even from Bill and Jan over the years. So we have a ton of questions. So I've actually done that. So I think that's always important, that they could contact you too.
Well, and I think at the end of the day, that's the value that I add to this. There's a lot of insurance agents that do a great job. There's a lot of insurance agents that probably know more about insurance than I do. But I can safely say that I'm pretty comfortable saying that chances are you're not going to talk to another insurance agent that's rehabbed the houses and has dealt with the problems firsthand that I have. I'm sure there are a few out there, but they're few and far between. And you're not going to be able to see them at the Bria meeting.
Absolutely. And I think also the big difference is like a lot of your client pool they're mostly real estate investors.
Yes.
So, you know, since you're in it, you're like living and breathing it, because it's always the investors having these issues. And this is the difference on your rehab, getting you into closing or getting the price you want, right? You work super hard on that rehab and you think everything's perfect. And then you know, you get to the point of the insurance, right? Everything looks good, the appraisal, and now it's a problem with the insurance. And that could, you know, literally kill your deal or cost you thousands of dollars. So I think that's always really important, that all insurance agents are not created the same. So
Right. Now, as far as the 4-point inspection, I'm almost done here, but I just want to go over that because we were talking about that and I haven't really answered your question. We talked about the roof, the electrical. There's two problems in an electrical part of an inspection. The number one problem is generally cloth wiring. And the number two problem is there are certain electrical panels that cause fires, that have been known to cause fires. Federal, Pacific, Stablock, Challenger, Zinsco. They are panels that are known to have problems. If you have those panels in your house, you would be much better to change them rather than try to deal with the inspection, because the inspection will be problematic for you. And then as far as the air conditioning, that's pretty straightforward. If it's old, it's a problem. And plumbing, as long as there's not polybutylene piping, you're okay. Polybutylene piping is a problem.
absolutely. And that's why it's important when you're looking at the house and walking the house. I mean, again, you don't have to know everything, but if you know the panels correctly, you might as well build that into your costs. Like we always just change the panels. It doesn't even, you know, there's no way that we're going to keep those panels. And as a rehabber, I think, you know, it's the right thing to do. You know, when you're fixing a house, you know, a family's moving in. So do the right thing. I'm not here to preach, but it's, you know, you want to be in the business for a long time. You want to make sure nothing happens.
Agreed. So I think I basically answered that question that you had in a roundabout way. And I believe that I've touched all of the major points that I wanted to talk about today.
Okay.
Do
I
we
do have
have
a
any?
couple more questions.
Yeah,
Yeah.
let's
And
let's
before
open it up.
yep, before I even get into a few of those questions, I do want to congratulate Carlos Garcia and Ron Osteen. They are the gift card winners, the Visa card. So make sure you contact our office, and we'll get you that gift card and connect you with Bob. So let's see. What about, I have a question here that says, how does it work in case of the properties are offered as rent to own? So I'm going to assume if you're, I guess, the owner, I guess, right? And you want to do a rent to own, what kind of insurance would you get? Like
Well,
if,
a rent to own is a rental. I mean, you sign an agreement that they give you X number of dollars that you hold in escrow for them, and title never changes, nothing changes. So basically, it's a rental. So you're going to buy the same DP1, DP3, and liability that you would normally buy, and you wouldn't actually have the customer do anything, or the client, the eventual purchaser, do anything differently until they actually buy the house. I mean, that's, I think,
yeah,
pretty
absolutely.
straightforward.
Yep. Robert's asking, is there an advantage of doing a vacant policy with a renovation endorsement over a builder's risk policy?
It's the same thing. It's identically the same thing. What Robert's talking about is he's just talking about verbiage that an insurance company uses, but
Right.
that's all
Yeah.
it is. Uh, you know, that policy may only be written as a vacant, and then they have to add an endorsement. You know, I don't know. I have companies that do it that way, and I can't say that I necessarily understand why they have it one way or the other.
Absolutely. Michael's asking, is it worth to have flood coverage? So I know, like, you know, depending on where you live, I know obviously some of the lenders may require it depending on who the hard money lender is. I know if it's your house and it's a conventional lender, they're going to definitely require it. But any thoughts on flood coverage or?
I have a lot of thoughts on flood coverage. To answer the question, if you're in a flood zone, and I can tell you every property, whether it's in a flood zone, there's a map I can look at. You can find it online. If the property's in a flood zone, 60% of the hard money lenders out there are going to require flood insurance, period. Every hard money lender that's a less traditional hard money lender and a more somewhere between a normal loan and a hard money loan, they're all going to require it. When you go to Irv Blander, because I saw his name as a participant, he may or may not require it. And then you get into the individual hard money lenders that may or may not require it. But as a general rule, banks, traditional, always required if you're in a flood zone. If you're not in a flood zone, they'd say you don't have to have it. You don't need flood insurance ever until the flood is coming up your front door. Flood insurance, unfortunately, is run by the federal government, and you can buy it from a number of different people. There are private markets out there, but because it's written by the federal government, the program is a train wreck. It's a disaster at every turn. And I would say to everyone, if I could avoid buying flood insurance, I would avoid it. But again, that goes into your personal level of comfort, because everybody has to be comfortable with what they're doing. But flood insurance is not inexpensive. If you have a good elevation, you know what? You're never going to get flooded. Then they give you a cheaper premium.
Right.
But if you're in a bad elevation, if you're in Miami Beach, oh my God, $2,000, $3,000 a year. I've seen flood policies that were over $5,000, $7,000. I'll tell you a quick story about flood insurance. I lived in Fort Lauderdale for 20 years, and I lived on a canal, and I could get to the ocean from my canal. And I bought flood insurance because it was required when I got the loan. And then when I paid it off, I kept on keeping the flood insurance. In 2004, the rules changed. There was a Bigger Waters Act, which was a whole big deal when they really tried to change flood insurance. They said, if it's not your primary residence, you don't get subsidies. So nobody knew that they were getting subsidies. However, the subsidies, in my case, made my flood insurance go from $2,000 a year to $16,000 a year. For 1 year of flood insurance on a 1,700 square foot 2-2 that's been there since 1964 and never had a flood.
Wow.
Yeah.
Did they give you a boat? Did they give you a boat for that insurance?
Well, at that point, the house was paid for, and there was no need to have flood insurance. But the market is a train wreck, and that is a bad insurance product. But a lot of you will have to deal with it.
Yeah, I mean, and it's always important to know that if you're, again, in a flood zone, because that will make a difference. Again, if you're rehabbing in those neighborhoods and they're doing financing, they still have to get approved for a loan. So those are some of the things that you want to, look into beforehand also.
Agreed.
I did put this poll up about, if our participants, if they feel they have enough insurance on their properties. So half of them said yes. A quarter of them said no, and I would be in that last quarter, not sure what is enough. So are you open to, and I'm going to put you on the spot a little bit, because for our viewers today, would you mind if they called you and you evaluated their insurance policies?
Of course not. I would never mind.
To see if, okay, so obviously I didn't ask Bob beforehand, but that might be something that you may want to do. Even if you think that you may have enough, you might not, you might be missing something. The people that don't have enough are definitely the people that are not sure what is enough. This is where, this is the time you gotta, kind of take control of what you're doing out there. One of the things, even for me personally, since the pandemic, I've had a lot more time to kind of work on my own stuff, if I should say, that I've been putting on the sidelines. So, reevaluating whether it's life insurance policies, your home liability. So I think, it's a good time to do this, because the problem is the issue happens when something goes wrong, right? And then you find out you didn't have this or you didn't have that, and then you always kind of learn afterwards. So, you know, Bob's okay with it, and again, you know, give him a call, and you know, I'll leave that between you guys on, you know, what he could do for you. Maybe he could save you some money. You might be overinsured on certain things, and I always get that question too. Can you overinsure properties? Like, it's worth 200,000, but I want to get 250,000 just in case. I know it's kind of a funny question, but I've seen that happen where people are trying to overinsure their property, or if it's worth 250, all fixed up. Should I get $250,000 worth, or what about the land? Do I need to insure land? Is the other question I always get too.
Yeah, they're good questions. And
Yeah.
like you said, what you do is if you're buying a house, if you bought a house, you have an appraisal. They say what the building is worth, and then they say
Yeah.
what the opinion of the site value is. And then they have the depreciation, and they have the other things that they add in. You have to find out what the value of the house is, because overinsuring a house makes absolutely no. Insurance companies love to collect money, and they won't mind getting more of your money, because they know at
Absolutely.
the end of the day, when the contractor says it costs $148 a foot to build it, that's what they're going to pay. And until you
Right.
can prove to them that you spent more than that, you bought insurance that you can't get benefit from.
Yeah, makes total sense.
Yeah.
I am pretty much, we're actually almost up to our 90 minutes. Do you have any parting words? We also put in the chat Bob's information, his email address, and his phone number, so you could always contact him. Again, he's willing to, now that I put him on the spot, review your policies to make sure that you know, you have the right coverage and it's everything that you need. Do you have any parting words that you know that you may want to, you know, on the insurance side or in general as a good investor and being in real estate and, you know, the last 40 years down here, anything that you want to tell our audience today?
Well, first, I want to say that as far as looking at people's policies, I do it every day. And I'd say that more than 50% of the time, I tell people to stay exactly where they are. I am not in this business to twist business my way. I know that when I do the job well, everything else will work. Sometimes it takes a week, sometimes it takes a month, sometimes it takes 2 years. You do it right, you're going to get benefits. So I'm more than happy to talk to people. What I'll say about the market in general has nothing to do with insurance. I said, for that 50% that hasn't bought a property, call Anish, call Ryan, find out how you can get a property, because this market is an extraordinary opportunity. Extraordinary. And the market will change. I'm not going to say how it will change, because I don't believe it will change dramatically, but it will change. But right now, we know people. I have customers that are buying a house every week, sometimes 2 a week. You've got to have a marketing monster to do that. However, do your homework, get with a good mentor, and do it. The only way you're going to make money in real estate is by doing it. Honestly, the only way you're going to learn, I mean, and I know these guys want you to have you as mentors, they want to teach you, but the best lesson is always signing on the dotted line, hiring the contractor, fixing the house, experiencing 3 or 4 problems, selling the house, experiencing 3 or 4 more problems, selling the house, and put money in the bank. That is the best lesson. And let me tell you, that's how I learned. And it almost worked.
And guys, you know, honestly, the fact that that Bob has been with this organization and other RIAs as well. We're not the only, you know, group that he's associated with. He's been a corporate member of ours for longer than Anish and I have been here. And you don't last that long in this business without having such a great reputation. And just knowing Bob personally, he's also just a really awesome all around guy too. So,
Yeah, and I was just going to add also in the chat, if hopefully you guys got a lot of benefit today with Bob. If you want Bob to do another insurance webinar, maybe a little bit more advanced, just put a yes in the chat, or maybe we'll convince him to come back one more time before the end of the year or the beginning of the year. So look, Bob, you got a bunch of fans. Look, I got a bunch of yeses. Awesome.
I see that. Wow.
See?
T-shirts and the hats made now, and send us your logo. We'll get the branding and everything done.
Yeah, that's it. See, that's and what happens if I move 25 policies to you? Do I get to go fishing with you? That's the other question.
All you have to do is get to Isla Mirada, and beyond that, I'll take care of it.
All right.
All right. That's
as you guys may or may not know, that some things have changed in my life over the last few months, and I made a bit of a change. I decided that I'm not punching a clock at an office anymore. So I built out an office in my home in Isla Mirada, and I am going to be a Jimmy Buffett rum drinking fan for the rest of my days. I still will come up for the meetings. I'm still going to do the things that I do. However, I'm just going to choose. And saying that, when I say that, it sounds like I don't work. And most people have a misconception that because I talk about fishing all the time, because I talk about exotic places that I fish, because I talk about rum, they assume that I have other people that do the work. And I have other people that help me, but I'll work at 6 in the morning before I get on the boat. I'll work at 6 at night. And when I wake up at 2 o'clock, and there's investors that may or not be here that have gotten emails from me at 2, 3, 4 o'clock. If I get up and I'm not going to sleep, I might as well work, because I'm not going to go fishing right now. I want to be sure to get all my work done so I can go fish.
So there you go.
absolutely.
That's it. It's a philosophy, and real estate has gotten me there. And I say hello to Jose. I see a hand. I know him. And I have talked to him at off hours.
There you go.
Awesome. So again, we want to thank Bob again. If you do need his information, it is also on our website. We have been putting it throughout the chat. If you go to bria.com, hit the corporate button, and you'll see Bob's information. We want to thank Bob for spending the time with us. I will have to go visit his home office to get some insurance done. I think my wife might think it's weird when I'm there 4 times a week, but that's okay. I just have to buy more properties, but not an issue. And
there's a lot of properties down there to look at.
Perfect. So again, thank you guys so much. You will be also getting a Google review from us too. So make sure you give